If you recall what I said on my podcast, I said I think silver will make a new high before gold, but gold will make a new high probably before the end of the year. And what is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs?
What if I told you the real signal behind gold's next explosion isn't gold at all? It's Japan getting ready to dump US treasuries. Because Peter Schiff just revealed something huge. Gold is holding above $4,100, silver above $51, miners are breaking new highs, and he says this is nothing compared to what's coming next. Why? Because the Fed is cornered. Japan might fire a treasury torpedo. Rate cuts are now almost guaranteed, and the affordability crisis is hitting breaking point. And Schiff warns, once this chain reaction starts, gold and silver won't just rise, they will launch into a new reality. Stay with this video, because what he explains next could be the biggest turning point for your wealth before 2026.
And silver is back at 51.5. So both silver holding nicely above 50, gold solidly above 4,000. You know, the GDX and GDXJ are still 9% and 12% off their highs as far as how much they'd have to rally. But some of the stocks, including some of the ones that we own in our dividend payer and value strategy, we own a few mining stocks in those strategies. You know, it's not my gold strategy or my gold fund, but we still have a few miners. And two of the ones that we own are Barrick Gold and IM Gold. And both of those stocks today hit new highs for the move. So some of the names have already started to hit new highs. And I think this is a leading indicator. And in fact, I think that the gold and silver stocks are going to hit new highs before gold makes a new high. Maybe not silver. Silver could take out the high, which was 54.40-ish before gold. In fact, I think silver will make a new high before gold, but gold will make a new high probably before the end of the year. And what is going to be driving gold to record highs and silver to record highs and gold and silver stocks to new highs is going to be the Fed. Remember, we have one more FOMC meeting. I believe it's scheduled for December 10th. And that is actually the day that I'm going to be flying back to the U.S. from Amsterdam. So I'm going to be in flight when that FOMC decision comes out. I mean, I'll try, I forget if I'm going to have any live television, on the plane. But I'll be able to talk about it probably the following day, but I'm not going to really be seeing it live. But that's the date I think it is, the 10th. And I know that because I got an email from Fox Business, Liz Clayman, who always likes to invite me on when we have the FOMC meetings. I got the invite, but had to turn it down because of, my travel plans. But I believe the Fed is going to cut rates again. And if you recall, the last FOMC meeting, that's when Powell threw a monkey wrench into the whole, rate cut, narrative by kind of saying he didn't really know what he was going to do, that it was kind of like a coin toss, that, they could cut rates, they could leave them the same. They really didn't know. It kind of depended on the data. And that really pulled the rug out from under these expectations. And the markets went down. They were nervous about it. And if you recall what I said on my podcast, I said I didn't believe the Fed. I didn't believe that they weren't intending to cut rates. I think they absolutely knew that they were going to cut rates again. They just didn't want to come out and admit that. They wanted to pretend to the markets that it's not a sure thing, that it's not a lock, and that, they're weighing the evidence, knowing that it really didn't matter because the economy is much weaker than they are letting on. So this is a huge move, and it's not going to stop at a round number. But I think that round number is going to be a significant event because the cost in Japan to the government of financing this massive debt is going to be significant. And I mentioned, yes, it was on the Schiff Gold market wrap, that what I think may happen in Japan is that to finance the massive stimulus plan that was just announced, that they will sell treasuries to pay for it rather than increasing the issuance of JGBs, because the Bank of Japan or the government indicated that there would be no increase in the issuance despite this huge stimulus package that needs to be paid for. If they're smart, or I know they're smart, but if they do the right thing, they will sell U.S. treasuries, which is going to be very problematic. But of course, that's another reason why the Fed is going to have to go back to quantitative easing and easy policy to try to offset the torpedo that the Japanese will be launching our way should they decide to start selling U.S. treasuries, because they're now the number one holder. You know, they're more than Japan. China rather. China was, I think, number one, but they've stopped buying. And so we rely a lot on Japan, but that could change. So the markets are reacting to the economic data. You know, the consumer sentiment numbers came out today. We're getting more economic data, and it sank to a 7-month low. In fact, in October, the reading was 94.6, and the reading collapsed in November all the way down to 88.7. So that's a big monthly drop in consumer sentiment. And I think a lot of this is being driven by inflation. Despite the fact that the president seems to believe that inflation is under control or non-existent, everybody is talking about the affordability crisis, whether it's housing, whether it's healthcare. It's all about things are not affordable anymore. People have a hard time making ends meet. And of course they have a hard time making ends meet because of all the inflation that the government has created. I think it's very rich that both the Democrats and the Republicans agree that we have this affordability crisis. In fact, it was that issue that propelled Mandami into the mayor's office in New York City, because he was playing into the fact that everything was too expensive and that the government was going to help lower the cost of living. But of course, it's the government that raised the cost of living in the first place. And it's both Republicans and the Democrats that are directly responsible for the affordability crisis. Because the reason that things are so expensive is because both political parties have decided to fund government spending through inflation. There is no appetite at all for reducing government spending and balancing the budget. Both parties want to continue to spend money that the government does not collect in taxes. So where does that money come from, right? It has to come from somewhere. And it's coming from the Fed, right? It's new creation. It's money creation. It's inflation. So instead of raising our taxes, in fact, they talk about cutting our taxes. But instead of raising taxes to pay for all this government, they rely on deficit spending and the Fed. And as a direct consequence of that, prices go up. That is how Americans are paying for government. They're paying for government by paying higher prices as opposed to higher taxes. So the increase in the cost of living is the direct consequence of the expansion of government. We don't get all this government for free. We're paying for it. We're just paying for it when we go to the supermarket, right? When you go to any store and all the goods are more expensive or all the services are more expensive, that is why. I was looking at just this article today that was up on Zero Hedge about $4 French fries, and it was going over how much food prices had gone up at McDonald's just in the last 4 years. And it was practically double, for hamburger, French fries, whatever was on the menu. But these are incredible price increases in just a short period of time. And it's not going to stop, right? The price increases are going to continue, and the government is allowed to somehow say there's this affordability crisis. I mean, the biggest irony is with Obamacare, where they're saying, no, we have a healthcare affordability crisis, so we need to increase the subsidies for the Affordable Care Act. But the Affordable Care Act was supposed to make healthcare affordable. I mean, it was passed a long time ago. Yet healthcare is more expensive than ever, even though we have the Affordable Care Act. And it's not that healthcare is getting more expensive despite the Affordable Care Act. The Affordable Care Act is actually helping to make healthcare even more expensive than it would have been if we didn't have the Affordable Care Act. And now Donald Trump is now endorsing this 2-year extension. Hopefully there'll be a lot of Republican opposition to this. But Donald Trump is saying, okay, we can have a 2-year extension. The minute that happens, that's it. If the Republicans agree to a 2-year extension, it's permanent. If they can't take away the COVID era subsidy now, they'll never be able to take it away 2 years from now. Right? The longer a temporary program remains in effect, the harder it is to get rid of it. So the best chance we have of getting rid of the subsidy, forget about Obamacare itself, but this new subsidy is right now. And if the Democrats win, right, or if they get a 2-year extension, then it just makes the whole thing even more entrenched into the fabric of our healthcare system, and no one's going to take it away. And of course, the subsidies are going to fuel the affordability crisis. The more the government subsidizes something, the more expensive it gets. I don't want to talk about this on the podcast because I spent 2 hours talking about it on Spaces on my X account earlier today. So go there. I spoke for 2 hours. I took questions about Fannie and Freddie and how Fannie and Freddie, with the government's help, have totally screwed up the housing market, how Fannie and Freddie are primarily responsible for the affordability crisis we have right now in housing. But I talk about all that. But one thing I didn't mention on that Spaces, because I didn't see the data until later in the day, but the houses that were delisted, right? Delistings where a home gets put up for sale and then it doesn't sell. And so the seller takes the listing down, right? So the house is available for sale, nobody buys it, and then the seller says, I'm taking it off the market. Those delistings have just hit like a record high, or 8-year high, not a record high, but it's the 8-year high. Now, why are houses not selling? Because they're too expensive, right? That's why they're not selling. People can't afford to buy them. Now, if the government sits back and does nothing, the housing affordability crisis is going to solve itself because housing prices are going to collapse. They will collapse to the point where they're affordable. That's the solution, right? So you won't have to worry that mortgage rates are high because you won't have to borrow that much money to buy the house because the price is going to be a lot lower. But that is the one thing that the government is trying to prevent from happening, because the government artificially boosted home prices with cheap money. But now, if we lose the home equity and the collateral for all these mortgages, Fannie and Freddie are broke again. It's another housing crisis. So the government, they talk out of both sides of their mouth. They complain about the housing affordability problem, but everything they're doing is trying to keep housing prices from becoming affordable, because the last thing they want is the prices to come down. Anyway, stick around. We got a quick commercial break, and I'll be right back. I got a lot more to discuss.
If this breakdown opened your eyes, don't leave without supporting the channel. please hit the like button, subscribe, and tap the bell icon. It helps more people understand what's really happening in the gold, silver, and dollar system. We've got more powerful updates coming, and you won't want to miss what's next. Stay sharp, and I'll see you in the next video.